What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for April 12th, 2023. So, if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, very interesting close to the end of the day. Now, something I've pointed out before is that these yellow lines have pretty much been the weekly candle. And then white lines I essentially mark as the daily indicators for essentially the day trend. So again, I try to match everything within uh, essentially ranges because that's what we've been playing ultimately until we get some big news events. Now, tomorrow and the rest of the week, we have a lot of big events. Tomorrow, we do have the core, which comes out at 8:30 Eastern Standard Time. Now, we are forecasting a 5.3% from a 6. And now understand that we have essentially barely dropped from the last one. We came in, I think it was at about 6.3 to 6, which I was expecting it actually to push back up. And then it dropped a little bit more. So that was good to see that we got continued, deflation. Again, in some aspects, you have to understand that demand has been, the consumer has been crushed so bad that it's really gotten to the point to where people are buying groceries on credit cards. People are doing buy now, pay later, right? People are using every aspect, selling assets to keep afloat right now, working multiple jobs just to keep afloat. Some people aren't even going into work or essentially working because of the fact it's too expensive. And even if inflation does come down to 5.3 as forecasted, which is a huge drop compared to what we've had so far, um, it would be good in a sense that we are coming to a turning point and could potentially pivot. But again, you have to also understand that unemployment is a huge lagging indicator in what's actually going on. And we're starting to see a lot of numbers reflect recessionary numbers. And so, with that being said, again, we all feel like we are in a recession, just with the way things are and understanding the where things are going. Now, the market's been trying to time a pivot, but ultimately understand that we haven't priced in a recession, and every essential recessionary period you price in a recession is when you get the huge drop. And we haven't priced that in because we haven't seen the actual pivot from the Fed just yet. We've seen them lower rates because we had a bank crisis come up about it's been almost 2 3 almost 3 weeks. It's about 2.5 weeks since that's happened. And so with that being said, it's been eerily quiet since essentially we lost two of the biggest banks in history and back-to-back weekends, and all of a sudden things were good. Again, you had Yellen come out today, strong and resilient kind of jazz going into the core. Now the problem with the core is we do not want core to get sticky at all or to start pushing back up. And we've been concerned that if OPEC with what they're doing in reducing the number of barrels being produced, that this could lead to higher inflation. And we are getting into the seasonal period, which people start traveling a lot. So there normally is that natural uptick in inflation around this time. So that is the concern to really determine if inflation is coming down or getting sticky, or we can start pushing back up. Um, and again, we do have our catalysts. We know where the breaking point is. We have hit that breaking point. We're just waiting for the next thing to break. We have to understand that the engine is pretty much running on no oil at this point, right? And you're just waiting for something to break, and that's what the Fed is doing, is waiting to pause until they get a break. If they felt it was over the last two banks, they would have stopped, but they did not. And so that is the big thing to differentiate what's going on here. So tomorrow we'll kick us off with a core. We'll see where inflation is sitting at, and then from that point, we will roll into we've got PPI on Thursday. I don't think it's going to have that much of an impact in the market directly as far as direction. Intraday it will, but ultimately, if we get if inflation starts rising up tomorrow, and then we get a PPI that backs that, it can feel whatever's going to happen tomorrow. is my case. So your directional event will be tomorrow on core, but again, it's going to have to be either one, it's going to start pushing back up, or it's going to come in even lower than expected. If it comes right on par, considering it's down so much, it might have some sort of movement. If it hasn't hardly moved from six, I don't really expect the market to do much. It's just more confusion at the time, and to try to these big events are wrapped around what could potentially happen, right? So after tomorrow, then you'll start getting more projections of what could potentially happen. And then, like I said, we're leaning heavily towards a 25-point basis move coming into May 3rd. So that is what we're kind of aiming for. The PPI, again, will feel that either way. If it's mixed between what we get in core and what we get in PPI, again, you're going to get a lot of shuffling like we've been getting. And then realize that, coming into Friday, we have bank earnings before the bell, and that's going to be huge. Especially coming off of a banking crisis. Again, they've had about 2.5, 3 weeks at that point to try to clean up their books before earnings. This is something you really need to understand. They've had 3 weeks to clean things up before earnings. So you might see a lot of weakness, but you're going to see a lot of other different things. And so people are going to be very prying into trying to determine where money's been shifting around over these past 3 weeks. Because a lot of these banks are essentially underwater, right? But unless those books go to market, you're not going to know that and understand how much these banks are underwater. So with all that being said, it puts us again in a very particular interesting series of events that are about ready to happen. And then obviously after this week, then we're going to start getting some bigger earnings next week and the week after. You're going to get Tesla, Netflix. I think Tesla is actually next week, and then you have Netflix following that. So I have to look at the calendar. I think it's on the 19th. Tesla is on the 19th. So 19th is next Wednesday. So we will get Tesla earnings next Wednesday. And then again, like I said, you'll have about 2 weeks span after next week. So you'll get you'll get Netflix and Tesla. And then you'll lead that following that will be like your Amazon and your Apple's and Microsoft, and then that may even bleed into another week after that as well. So these next essentially 3 weeks after this week will be important. Then after that, the market is considered earnings is done, in my opinion. After that point, earnings continues well on into the whole quarter. You have to understand that, but ultimately understand that the market only cares about the industry leaders when it determines its direction. So this is one thing you need to be aware of. And so, as you can see, we've been playing within the weekly candle here. That's what again these yellow marks are, is the weekly candle for the week. For last week, we've been playing inside that. We've grinded against the bottom and haven't broke. We attempted to push up over the past 2 days and then just started selling off. Again, normally before we come into a big event, like I've always stated, going into a big event, we kind of get a cushion going into it, right? Like the market starts to try to rip before essentially that event happens in case it is bad, right? And then it will sell off or could potentially break up. Again, I don't think we have enough, not to say that we can't. I think we could still, if we do break up, we could go rip up to the 4,200. But then I think essentially the buck stops there, right? Until we really determine what is going on. We don't have clear guidance for the next 6 months on what's about ready to happen. And again, if we start pricing in a recession, if we start getting more recessionary numbers, and it's going to really start affecting when we start getting really bad jobs reports, right? We're starting to see job reports are coming down. So even this quote unquote jobs that are out there, they're coming down a lot. So we had a 100K drop just over this last non-farm. So on the next non-farms next month, we'll see what happens. We'll maybe actually see true numbers on those and understand people actually rolling off of severance packages and everything else. And so we'll start seeing more of those because again, these bigger tech corporations, they have bigger packages, right? And so that's something you need to understand, and then ultimately understand that it's starting to seep into essentially other businesses as well. So just keep that in mind on what's occurring now. So when McDonald's starts laying off, which has been interesting, they've been really eerily quiet. But coming into earnings, you're going to start getting some stuff. And the key to understand here is we know what the end game is, right? There will be a correction of a recession. The thing is they fought it to this point saying that there would be no recession. The market hasn't priced in a recession, right? The market's been trying to price in these moves and these pivots. They haven't priced in any recession because it's been a quote unquote soft landing or a no landing, but we will see, right? And I would agree with that. I think once the full price in a recession, which will take some time to play out, and not saying the economy will be bad for the next couple of years in general, but as far as the market's concerned, I think again we will price in a recession, which will cause a big melt off or crash, whatever you want to call it, and then after that point, that would be your bottom, and then again, depending on how much that plays out, right? We're waiting for whatever that catalyst is that's going to be the thing that essentially, the hair on the camel's back that's going to break it, that will cause this thing to implode. And then at that point, you would have normalization, which I've talked about, which is roughly around that 3,200. At that point, I think that's the bottom, and then from there you could recover. Again, I think we could get a big boom cycle. It could potentially start getting to where we start printing money again, potentially next year. But you need this thing to play out. I think that's what people don't understand, is that you need this whole thing to play out. There's too much demand for Powell to start flaying off rates, and that's why we got another rate increase. So demand has to go away. That means something bigger needs to happen for that to happen. And that's what I've been waiting for, is that bigger event needs to occur. You have to let it occur before there's an actual true pivot. So you can't, and then once that true pivot happens, whether it's pricing in a recession, which essentially is where we're getting drove toward, we're waiting for this thing. We've seen how long it's taken for the banks to start breaking, right? Like we started laying on rates around this time last year, and it took us a whole year for banks to start breaking. So that should tell you how long this takes for this thing to play out. But we're at that point. We finally realized we're at that point, and we see a lot of these other, again, things, the longer we hold rates or pause rates, even at or currently where they're at, is going to cause them to break. We've talked about this with the commercial loans and everything else, and the defaulting on all these debts, right? It's just going to put more people underwater because you're draining more resources, whether that's they're selling all their wants that they bought over the pandemic and liquidating everything and starting to liquidate houses and all these other things that are causing these issues. So with that being said, we'll see what happens and what tomorrow brings. Tomorrow's going to be the kickoff of everything, and then that's going to bring us, like I said, that'll bring us straight into the banks to finish us off, and then next week is full earnings cycle, right? And normally the market tries to pump during that time, but this case might be different. Like I think we've had some sort of pump up to this point. If I actually flip this back to the daily, we've had a pump essentially from this point. Coming into the new years, and it's essentially, you can see this was the last one. This was the last earnings pump that we've had, and again, same thing. We had a shorter basis for earnings pump. The market is very undecided, right? And so that's something you have to keep in mind. The market's ready to turn over and sell, and I think again, 3,200. That's why I got this big zone down here. This is your normalization zone. Somewhere between here, the 3,200 and the 3,800 is where things are properly priced, and that's on the index. So that means there's still a lot more that can come off of tech, come off the banks, come off of everything else, right? And if you have a panic of a recession period, that could do it, right? And you're seeing massive layoffs, and once they start rolling out of tech into the other industries, it's going to be alarm for concern. So we'll see what happens there. But tomorrow, like I said, tomorrow will be a big day, and we'll go from there. Bitcoin has been very strong, but again, it's hit this. I've talked about this zone many times before. I said it could go up to 30K before this whole thing essentially it falls out, right? And something I talked about, this is a true dead cat bounce. The massive push you got here from here to the bottom, this is your, I mean, this thing could still even push up quite a bit, but this is normally what a dead cat bounce, like technical wise, this is what you look for, dead cat bounce. You got massive selling. You get about almost a 50% retracement, which you could even go with a case that we could attempt to try to push to 40K before this thing rolls over and starts selling more. Again, the same thing happened during the pandemic. Every major crash year we've had these huge turn-ups and then massive crashes. So you just have to be mindful of that. That's essentially what's happened going into everything, right? And then we had that huge boom cycle. That's obviously where we got that. Bitcoin halving is still, I think, way too far away for us to start really running. But it's not saying that we can't recover some, right? This is, again, very technical dead cat bounce on the monthly. And again, this thing could push up and then wick and then drop. So we're only about halfway through April. Very much could happen. So, and again, you haven't had any retests. Something I talk about all the time. As you haven't had a retest, this thing can even push to 34K, right? And then wick and then right back down. So you have to be very critical about that and understand that the SEC has been, I think, holding Binance in that whole industry. If Binance goes down, that could be the gut shot to Bitcoin, right? And understand if they take Bitcoin down or do something with or Binance, that could be the thing that brings down Bitcoin. Who knows? Again, not trying to fear monger, just trying to point out some things that we need to be aware of, as opposed to, thinking that this thing could completely reverse right now. I think we need that bigger thing. And again, we need to focus on the fact that we need a big catalyst to normalize things. We need normalization instead of trying to fight it. So with that being said, gold, again, breaking up. Normally gold doesn't rip like this, right? But if there's enough fear in the market, gold will rip. Bonds will rip. Bonds have been selling. Something I said, you need to keep an eye on bonds. If for some reason, Powell does start to cut, these things could explode up, right? And so this thing could really rip back up to 180. I don't know about that, but it could definitely rip up quite a bit. So like I said, I think this move in itself was because of what happened with that 40% of the money supply essentially being printed, and the concern, even you look back, right, this is to 2019, like we started getting worried and panic then, and then just massive selling. So I think we're going to get one more huge spike here. You're going to get your true dead cat bounce here is what I'm saying. Maybe it's up to maybe 150, right? You get a dead cat bounce off your bonds, and then that will be it. And then we can reset the clock and start this whole thing over. So then Tesla trying to fight it here. But again, first break, retest. I think Tesla's still going to drop. You got a pretty hard floor here at the 131. A strong floor. We got to bounce off of it, obviously, but we'll see what happens there. This thing wants to revisit 110 or the 100 mark, but we'll see. We'll see. We need fuel. If you want this thing to continue to go down, you need fuel to the downside for that to happen. So as of right now, it's still got rejected again on 185 here. I think this is still at least headed down to 140, if not lower than that. Again, it would be a higher low, right? If you're going off this particular high, or I mean, you can go off this, whatever the case is, these higher time frames, right? Like even this essentially could be your high up here. And if this doesn't break up, to try to make its way back up there, which I think there's, again, still too much bad news for this thing to rip up and break up back over the 309. I think this thing is going to continue to sell off, in my opinion. But we'll see. Time will tell. Again, I'm not trying to play direction. I'm trying to wait for events to tell me what's going on here. BA, again, rejected. Can't break that 220 mark. Seems to be impossible, and still holding the 192. So keeping that in mind for tomorrow. At JPM, this would be a big day tomorrow with inflation. Remember, I pointed this out. Keep bringing this up, that this needs to be filled. At some point, it will be. And we saw that in Tesla and the SPX. So we need to, at some point, this thing will break. Maybe it will be Friday. Who knows? We continue to chop. I mean, this thing could chop for a year. So just be mindful of that. And it could be extremely painful like it's been over the past couple of months. But we have to wait and see how things do play out. So with that being said, that is pretty much what we got for today. So again, we have core tomorrow. We'll see what happens there. Again, that's pre-market, so we'll get that information tomorrow. Again, if it drops just a little bit, you're going to get a lot of indecisiveness. The market's not really going to know what to do, right? If it starts running up, that's a huge cause of concern. If it comes in line or even drops further down, they can build a bull case to push us up to 4,100. 4,100, or is it 40? I think 4,200 is the next. Yeah, 4,200 is the next 100 points that we could push up. But again, be very careful and be very mindful of what's occurring. Right, there's just a lot of bad things that are happening, and if we do price in a recession, that's going to be you're definitely going to have to be very careful when that does get priced in, because you don't know when that's going to happen. You don't know, again, what that event's going to be that's going to cause it to stir the panic that could drop us. So with that being said, go ahead and drop a like button. I appreciate you for watching and listen to me jibber jabber. And until next time, I'll see you guys later.